Okie dokie. Good day, everybody. This is James of MarketsAware, bringing to you your daily insight on the 28th of July 2016 with love and care, of course, from MarketsAware. Today, we're just having a quick market update, discussing what happened, obviously, after last night's FOMC and what else to look out for as we close this week out. So, closing this week out, let's have a quick look on what events are still to come into play. First, of course, as I've already discussed, we have the Bank of Japan interest rate decision, which is indeed at midnight on the 29th of July. As I mentioned, the expectation is for them to decrease the base rate by another 0.1% to minus 0.2%. Of course, this is going to be obviously high importance, and we'll need to keep of course an eye on the dollar yen, sterling yen, on obviously the euro yen. And of course, during the day, but not with any specific time, of course, we have the Bank of Japan monetary policy statement. Yay. And of course, the expectation is, like I say, they hit me up with more steroids, all that good stuff, which I'm going to, of course, do more stimulus to revive the Japanese economy. Again, high importance on this matter. One needs to keep an eye on the dollar yen, the sterling yen, and the euro yen, of course. Then, remaining on the 29th, obviously it's Friday, the end of the week, at 9 a.m. we have a pretty important event, which is the EU GDP. Expectation is for the actual number to come in lower from previous at 1.6%. Start again to 1.6%, opposite the 1.7% previously. Of course, this can be extremely high importance, so we need to look at, obviously, keep an eye on the euro against obviously the majors, the dollar, yen, and the euro sterling, which is quite interesting actually at the moment. Then later on that day at 12:30 p.m. GMT, we have the US GDP, not to be outdone by the EU. They're doing their own GDP announcement. This is expected to be slightly better, coming in at 2.6%, which is higher than it was previously at 1.1%. Again, high importance, so we need to keep an eye on the euro, dollar yen, obviously, of course, but also keep an eye on gold, S&P 500, and the dollar index. But again, it doesn't end there. Later on that night, a little bit later than for everybody, especially as the market is about to close, is the European Union Bank stress test. This, of course, is where they do a test on a number of European banks to see how stable they are and if they can survive another financial meltdown. Now, usually they release this information quite late to try and have a lulled effect on the market. So it'd be interesting to keep a very close eye on that, especially, as I say, it's coming in at 8 p.m. GMT. So that's a little coming near the end of when the market closes. So you have to keep an eye on that for obviously how Monday may open, if it might have a big impact on the Monday session, so the Asian session when the market's open. Of course, also you need to keep an eye on the euro dollar, the cable, the euro yen, etc. But we'll have to keep a very close eye on what happens with that. So let's have a little chat about the morning after, obviously after our evening with Janet. Now, the FOMC again stood still in reference to raising rates, with any decision now being pushed back to possibly September of any increasing the base rate. However, they did underline that they're unwilling to act too quickly due to fears of a China slowdown, stock market weakness, a weaker job market, and of course the BRIC exit. That's mentioned that quite a few times, but the BRIC exit, of course. Now, many are expecting actually that the base rate to remain at 0.5% for the remainder of the year, and we won't see any increase till 2017. So that's sort of what the market is sort of looking at and sort of expecting at the moment. Now, of course, as I mentioned yesterday, all the attention is, of course, on the Bank of Japan, and we'll have to see whether or not they disappoint the market too. As it currently stands, let's have a quick look, first of all, at the dollar yen. Here we go. This is obviously on a daily chart, okay? Now, like I maybe mentioned yesterday, there was indeed a little bit of short-term noise on the back of the FOMC announcement. However, after a disappointing FOMC, the dollar yen dropped back and couldn't break that important simple moving average resistance level of 105.58. So really, it still is indicating that the dollar yen is still on a downtrend. However, if we have a look at our good old friend Bollinger on a daily, it's sort of indicating there is a potential support at 104.034. So we need to keep really a close eye on these two levels, certainly with the Bank of Japan about to come into play later tomorrow or early tomorrow morning. So there's something for us to keep an eye on. So like I say, it's all about the Bank of Japan. Moving on, we've got obviously the euro dollar. The euro dollar actually, again, this is on a daily chart. They actually benefited slightly, had a slight recovery on the back of that disappointing FOMC. It's still under the simple moving average, where there is a potential, according to the simple moving average on a daily, there is a potential key resistance at 1.11547. So really, again, it's indicating that the euro really, as it stays under that level currently, is still slightly on a downtrend. According to our friend the Bollinger Band, it does say, or is indicate there is a possible initial support at 1.10562. After that, with potential second support at 1.09654. Now that level actually has been tested a couple of times already, if you can see here, here, and here this week. So really, we need to really keep an eye now on what the European GDP brings, and also, like I say, the bank stress test later tomorrow night. And okay, so moving on to the dollar index. I asked that question, of course, Janet, do you love the dollar index? And her answer was no. And it has actually suffered slightly due to that lackluster FOMC. According to the Bollinger, again on a daily, there is a potential resistance at 97.5307, with, again, a first potential support at 96.5501, which is being tested as we speak. Followed by that, there's a second potential support at 95.5695. And finally, moving on to gold. Of course, gold is always referred to as the safe haven of choice, because obviously when you have a lot of uncertainty, gold tends to benefit. This is gold on the daily, and like I said, on the back of the FOMC, it actually has benefited slightly. We are now actually remains above the simple moving average. Okay, this again on a daily chart, where it's saying the potential support for gold on the simple moving average is 129375. As it remains slightly above that simple moving average, is indicating that gold is still on a potential uptrend. And however, according to our Bolliers on a daily, they're saying that the key resistance really is at 1,339.85. So really, we are sort of trading between these two key levels with a minor potential support, again, according to the Bolly, if we do get, etc., is at 1,308.19. They are saying also on the Bolly that the second potential resistance on a daily is 1,371. So really, we'll need to keep a very close eye on the US GDP as a potential driver. If we have a very positive result, we could see obviously testing the potential support at 1,308, followed by 1,293. However, on the upside, if it's disappointing, you could see people start to move into gold. So obviously those two key resistance on the Bollinger on a daily could come into play as well. So worth, again, keeping an eye. And like I say, these are the Bollingers and these are potential levels. And as I always say, that is a wrap for now. As always, this is no way to be taken as advice. It's just for informative, easy for me to say, for your information, for you to digress and take it, just for informative purposes. Special thanks again to Nedania for the charts. This is James from MarketsAware. You trade safe.